Hey there, welcome to another video on investing on the stock market. If you have any questions or suggestions on today's topic or anything else stock market related, drop me a comment. So one of my favorite ways to invest in stocks are ETFs, exchange traded funds, which are just like regular stock funds. They're baskets of stock where you get a lot of different stocks in one. So if you don't want to pick one or two specific companies, you can buy one of these and get great diversification, and it's a safe way to invest. They're also much cheaper than traditional mutual funds or hedge funds. And one of my favorite sectors of the stock market to invest in is the technology sector. It's where there's a lot of growth, good earnings, high multiples. There's a lot of risk, a lot of up and down, but this is the industry where I see the most potential, and it's a quite diversified sector. So it's not like technology is only your Googles on Facebook and Microsoft. There's so much going into technology now, right? There's the internet, there's cloud, there's e-commerce, financial technology, so much more. So today I thought I would give you my top 10 tech ETFs. So why are they my top 10? Well, there's some broad ones, some specific ones, some cheap ones, some expensive ones. They're all low dividend, quite high risk, but I think there's a good potential for growth in these ETFs. So we're starting off with Fidelity's FTE. It's a broad US information technology fund. So these are going to be your Googles, your Microsoft, your Apples, and so on. And it offers a really low expense ratio at 0.08, well below the average, and 0.91% annual dividend. So this is a great play if you just want a broad, diversified US tech ETF. Now moving on to O-Shares, OGIG, which is going to be the international mega cap technology companies. So these are mainly going to be the largest technology companies from the US and China, offering about 0.48 expense ratio, which is below the category average, not the overall tech average, but this category average. A very exciting ETF. I really love O-Shares ETFs. It's from Kevin O'Leary from Shark Tank. They're quite small, but they're just beginning, so very exciting ETF. Now moving on to one of the largest tech ETF, VGT from Vanguard. This is as safe as it gets, 0.1% expense ratio, which is way below the average at 0.5, I believe. 0.91% dividend. This is going to be your US broad big tech, so it's going to be your Microsoft, Facebook, Apple, Google, and so on and so on. So pretty much as safe as it gets. So moving on to the one of the more unique ones, QQQC from Global X. It's China Technology, 0.65% expense ratio, which is above the average, 2.42% dividend, really high there. China is high risk, but also high reward. You get a good dividend. It's quite a small ETF, so the liquidity is not great, but it's a very exciting one, and I think everyone should be invested in the Chinese technology sector. Moving on to XLK from SPDR, the largest technology ETF. I believe it has 0.13% expense ratio, 1.27% dividend. This is just like VGT. It's a broad US technology fund, which is your good old FANG stocks and whatnot. So again, as safe as it gets. It all comes down to preference between these big broad ETFs. I would say they're all about the same. Moving on to ETFMG's HACK, which is cyber security at 0.64% expense ratio, above the average, no dividend, it's 0.01. So these are cybersecurity companies, which is a vital part of the technology sector. Now, I'm not personally very interested in this ETF because I think most big tech companies can do their own cybersecurity, and it's a very volatile sector. So I'm not sure about this one, but high risk, high reward. And whenever there's big cyber attacks, this ETF goes up a little bit. So an exciting play. Moving on to VanEck SMH is a semiconductor ETF. So these are going to be your Nvidias, Intel, Broadcom, Texas Instruments, and so on. It offers 0.35% expense ratio, below the average, and 1.31% dividend. So moving on to Global X's SOCL, aka Social. This is a social media ETF, so it's going to be your Snap, Facebook, Twitter, and so on. There's some big tech companies in there as well, offering 0.64% expense ratio, which is above the average, and 1.49% dividend. So again, I personally would go with a more broad tech ETF, but if you're all about social media and you believe these companies such as Twitter, Snap, and Facebook can maintain their position as the go-to social media platforms, this could be a good play. Moving on to First Trust's FDN, medium-sized ETF there. This is an internet index, so basically all the major tech companies minus the hardware business. Does about 0.53% expense ratio, which is just at the average, but no dividend to speak of. So I think these are all great ETFs. I personally own QQQC, and in addition to that, I would probably go with one of the US broad index funds or the OGIG Mega Cap International, because I would like to get some Chinese in there. So if I had to go with only one and not my personal holding QQQC, I would go with OGIG. It's a small, expensive ETF, but I think it's a perfect blend. You get US and China and international, and yeah, I would definitely go with that one. There you go. Let me know what sort of ETFs you guys are invested in. Are there any tech ETFs I missed out on? Now, I did exclude financial tech and robotics and these other smaller niches because I think they're more like unique ETFs, and they're very different from your Apples and Microsofts and Googles and so on. So let me know what you guys are invested in. As always, I'll see you in my next video.